Before every chart loads, before every candle forms, there is a silence. It's the quiet space between thought and action, between who you were yesterday and who you are about to become. Most traders skip that silence. They rush to analyze, to predict, to control. But in that rush, they forget the one thing that matters most: clarity. This is Mind Over Markets, a place not for signals or noise, but for awareness, for learning to see yourself within the movement of the market. In this episode, we explore a concept that hides behind numbers, but lives inside emotion volatility-adjusted sizing, not as a formula, but as a philosophy, a way of breathing with the market instead of fighting it. Because trading is not about control, it's about calibration between risk and peace, between motion and stillness, between the world outside and the mind within. Take a deep breath. Let the noise fade, and listen not to me, but to the silence between each word. That is where your edge truly begins. There comes a moment in every trader's journey when the market stops feeling like a chart and starts feeling like a mirror that reflects not what the world is doing, but what's moving inside you. Every candle, every swing seems to echo something deeper, a pulse, a reaction, a quiet whisper of fear or hope. At first, you think the volatility is out there. You think it's the market that's wild, that the chaos is external. But then after enough trades, enough mistakes, you realize something unsettling. The volatility was never in the market. It was always in you. Because the market doesn't move with emotion. You do. And every position size you choose, every click you make isn't just a decision of math. It's a reflection of your state of mind. Some days you trade small, afraid to lose. Other days, you double your size, convinced you found the rhythm, as if certainty could be forced into existence. But volatility doesn't answer to your confidence. It answers to itself. The market expands and contracts like breath. And you, the trader, are supposed to breathe with it, but you don't. You resist. You fight the rhythm. You try to trade yesterday's calm in today's storm, and you wonder why your equity curve shakes like your heart rate. Volatility-adjusted sizing is not about formulas or indicators. It's a conversation with uncertainty. It's the art of saying, I don't control the storm, but I can adjust my sail. Every time the market changes speed, you're being asked a question. Can you stay balanced when the ground moves beneath you? Most traders don't answer. They react, they chase, they hide, they tighten, they expand. They forget that size isn't just a number, it's a psychological lever. It magnifies everything you are. The bigger your size, the louder your emotions. The smaller your size, the quieter your mind. And somewhere between fear and overconfidence lies that fragile middle ground, the place where your logic and your instinct meet. That's where true sizing lives. Not in the equation, not in the spreadsheet, but in the awareness that volatility isn't your enemy, it's your teacher. It's there to show you how attached you are to control, how easily your peace disappears when your chart does something unexpected. When you size your trades without adjusting for volatility, you are unconsciously betting that the future will behave like the past. And when it doesn't, your emotions pay the price. You feel betrayed by the market, but it was never betrayal, only your illusion breaking apart. The truth is, you don't need to fight volatility. You need to understand it, feel its rhythm, and let it tell you when to breathe. Because volatility is the market's way of testing your alignment, not your skill, not your strategy, but your state of mind. If your position size is too big for your nervous system, you won't trade the chart, you'll trade your heartbeat. And when your heart becomes your chart, no system can save you. So you start to realize that every trade is not about predicting direction. It's about calibrating your mind to movement, about making sure your internal volatility is smaller than the market's. Only then can you see clearly. Only then can you survive the randomness without losing yourself inside it. Volatility-adjusted sizing at its core isn't a risk management trick, it's a meditation. It says, I will not demand calm from the market. I will create calm within myself. When you trade like that, something changes. Your charts stop shouting. Your mind stops running ahead of the price. You begin to notice things you never saw before, the silence between the moves, the pattern beneath the noise, the rhythm beneath the chaos. And that's when you understand the market has always been neutral. The emotion was yours. The chaos was yours. The volatility was yours. The moment you learn to size with awareness, you're not just managing risk, you're managing your relationship with uncertainty. Because trading is not about conquering volatility, it's about dancing with it. And every dance begins with learning to listen. There is a strange moment that happens in every trader's path. It's not the first win. It's not the first loss. It's the first time you realize you were never in control to begin with. You thought control came from more information, from more indicators, more analysis, more confidence. But control in trading is an illusion. The market gives you feedback, not obedience. And yet deep down, we all try to bend the market to our expectations. We say this setup should work, this candle should reverse, this pattern must mean something. But the market doesn't hear the word should. It only responds to volatility, to pressure, liquidity, imbalance, and emotion. And when you mistake your belief for control, your position sizing becomes emotional. You start using size to prove something, to prove that you're right, to prove that you've learned, to prove that the loss you took last week was just bad luck. That's when volatility becomes your mirror again. Every swing, every sudden spike reflects not the market's uncertainty, but your need for certainty. We tell ourselves that risk management is about protecting capital. But deeper than that, it's about protecting clarity. Because when your risk feels too big, your perception shrinks. You stop seeing the market, you only see what you fear will happen next. That is emotional volatility, the invisible kind, the kind that lives inside your pulse long before it shows up on your chart. It starts small, a hesitation before clicking. A voice that says, what if it reverses, then it grows? You take profits too soon. You widen stops to avoid pain. You add size to make back what you lost. And slowly, without realizing it, you are no longer trading the market. You are trading your emotional state. Volatility outside. Volatility inside. The two begin to echo each other until you can't tell them apart. That is why position sizing matters. Not because of math, but because of the nervous system. When your size is too big for your emotional capacity, you are operating beyond your psychological limit. And when that happens, your logical brain goes offline. You're no longer analyzing probabilities. You're seeking relief. You're trading not for profit, but for peace, the peace you lost the moment you overexposed yourself. Think about that. Most traders don't lose because they lack knowledge. They lose because their size is a weight their mind cannot carry. A small position allows for clarity. A balanced position allows for patience. An oversized position destroys both. And so the goal is not to trade more. The goal is to trade lighter. Because every time you adjust your position to volatility, you are doing more than adapting to the market. You are teaching your mind how to stay calm in chaos. You are training your nervous system to stay steady while uncertainty moves. And over time, you begin to notice something subtle. When volatility increases, you don't panic. You breathe. You reduce your size not out of fear, but out of respect. Respect for the market. Respect for yourself. respect for the truth that uncertainty is not a threat, it's a constant. And when you start to respect volatility, it stops feeling like the enemy. It becomes your compass. It tells you when to expand and when to contract. It tells you when to move forward and when to pause. That's the paradox of control. You gain it only after you stop demanding it. You cannot control the waves, but you can learn to surf them. You cannot control volatility, but you can flow with its rhythm. When you finally see this, the idea of volatility-adjusted sizing is no longer a technical trick. It's a mindset. It's the embodiment of balance. Because balance in trading is not about being neutral to profit or loss. It's about being fully aware of your reactions and choosing your position size so that your awareness stays intact. The smaller the emotional footprint of your trade, the clearer your perception becomes. And the clearer your perception, the better your decisions. Volatility-adjusted sizing is a discipline of awareness. It is the space between impulse and response, between fear and patience, between what you want to happen and what is actually unfolding. You learn to trust that space. You learn to pause before you click. You learn that every trade is not a battle to win, but an opportunity to remain centered. And when you do that, you begin to trade differently. Your equity curve still moves up and down, but your heart doesn't. Your mind stays steady, and in that stillness, you begin to see the market for what it really is, a mirror, not a monster. Volatility reveals you. Sizing protects you. Awareness transforms you. That's how you start to bridge the gap between technical precision and emotional mastery. And it all begins with one decision to size not for the market you want, but for the volatility that's here. The longer you trade, the more you begin to see that markets are not made of numbers. They are made of motion. Every move, every retracement, every spike that feels like chaos is part of a greater rhythm. The rhythm of imbalance and equilibrium, of fear and relief, of uncertainty becoming clarity and clarity dissolving again into uncertainty. At first you resist it. You try to make the rhythm predictable, to box it into systems, to tame it with rules. But over time you learn that the goal is not to predict the rhythm, it's to feel it. You begin to sense that volatility is not noise, it's language. It's the market speaking in emotion, in momentum, in hesitation. And every trader who survives long enough eventually stops shouting back at it. They start listening. Volatility-adjusted sizing is the way you listen with your capital. It's how you say, I hear you. You are moving faster now, so I will move slower. It's how you tell the market, I will match your pace, not fight against it. Because in truth, there is no fight, only friction created by the mind's refusal to let go. The untrained mind wants control. The awakened trader wants awareness. The difference between them is the difference between reaction and response, between drowning in volatility and dancing with it. When you adjust your size, you are adjusting your relationship with motion itself. You are saying to the market, I am willing to adapt. And adaptation is not weakness, it's wisdom. The weak trader demands that the world be stable. The wise trader learns to stay stable within instability. That is the essence of trading psychology. Not confidence, not certainty, but balance. Balance between fear and greed, between patience and urgency, between knowing and not knowing. Every time you size down in a storm, you are reminding yourself, I choose longevity over intensity. You are building something that few ever do, a nervous system that can coexist with chaos. Because markets are not designed to destroy you. They are designed to reveal you. They show you where you are rigid, where you are attached, where you have mistaken belief for truth. And when volatility rises, it exposes everything inside you that still resists uncertainty. That resistance feels like stress, like frustration, like wanting to quit. But in truth, it's an invitation, a test of your emotional flexibility. How gracefully can you move when the ground beneath you shifts? How calmly can you breathe when everything you thought you knew stops behaving the way it used to? That is volatility's real lesson. Not how to calculate your stop loss, but how to remain centered when your expectations collapse. In that sense, every trader is not just a student of the market, they are a student of impermanence. Everything changes, everything breathes, everything fluctuates, and so must you. You begin to understand that volatility-adjusted sizing is more than risk control. It is a philosophy of alignment. When volatility expands, you contract. When volatility contracts, you expand. When the world speeds up, you slow down. When the world quiets, you listen deeper. It is the rhythm of nature itself, the inhale and exhale of existence. The trader who learns this rhythm stops fearing volatility altogether because they no longer need it to behave. They only need to stay synchronized. And that synchronization creates a profound stillness inside you, a stillness that doesn't depend on results, a calm that exists even when your P&L moves. That calm is not detachment, it's mastery. It's the moment when your emotional volatility finally becomes smaller than the market's volatility. That's when you stop reacting and start responding. That's when you start seeing clearly, not through the lens of fear or hope, but through the eyes of awareness. You begin to sense your own energy. You can feel when you are forcing a trade, when you are chasing a loss, when you are anchored in bias. And instead of fighting those feelings, you simply reduce your size. You give your mind room to breathe. Because smaller trades don't just reduce risk, they reduce ego. They shrink the illusion of control. They give you space to see the truth without distortion. And from that space, clarity emerges. That clarity is not excitement, it's peace. The quiet confidence that says, I am not here to win every trade. I am here to remain whole. When you trade from that place, the outcome loses its grip on your emotions. A losing trade no longer feels like failure. It feels like information. A winning trade no longer inflates you, it grounds you. You begin to view trading not as a series of battles, but as a continuous flow. You are not conquering volatility. You are conversing with it. You are not beating the market. You are aligning with it. And in that alignment, you discover something rare, the feeling of being in motion, yet completely still. That is what it means to dance with uncertainty, to let go of the need for control and instead move with awareness. Because control is an illusion, but awareness is freedom. And freedom in the world of trading is the ability to act without the weight of emotion. The ability to size not from fear, not from greed, but from understanding. Understanding that volatility is not here to test your courage, it's here to refine it. It teaches you that strength is not in holding firm, but in adjusting gracefully. It shows you that mastery is not about eliminating uncertainty, but about learning to stay present while it unfolds. The dance never ends. The rhythm never stops. And the more you learn to move with it, the quieter your mind becomes. Because you finally realize the only thing that ever needed adjustment was not your system, not your stop loss, not your indicator, but your own internal sizing. Would you like me to continue with part 4, which will close the script with the discipline of awareness, becoming the calm within the chaos, bringing together all the emotional and philosophical threads into a powerful reflective conclusion. Banja Noi Part 4, ChatGPT Janoi here is Part 4, the final chapter of your reflective voiceover script for Volatility-Adjusted Sizing ATR-RV Simplified, Trading Psychology. This section completes the journey, calm, introspective, and deeply human. It's written for direct 11 Labs narration in the profitable mind tone. Approximate read time 10-12 minutes. Part 4, The Discipline of Awareness. At some point, every trader reaches a quiet crossroads. It doesn't come with drama or noise, it comes in silence. A moment when you finally understand that the market was never your opponent. It was your reflection. Every loss, every panic, every victory was a mirror showing you who you were at that exact moment in time. And when you see that clearly, something inside you softens. The fight ends. The tension dissolves. You stop demanding that the market make sense. You start allowing yourself to. That's when discipline transforms. It stops being a rule you follow and becomes a state you inhabit. Volatility-adjusted sizing is not about perfection. It's about presence. It's a constant reminder that your capital must serve your clarity, not the other way around. Because clarity is fragile. It disappears the moment your emotions expand beyond what your position size can contain. So you begin to protect that clarity the same way you protect your capital. You defend it from impatience, from attachment, from the noise of needing to be right. And in doing so, you build a new kind of discipline, a discipline of awareness. The awareness that says, I will not let volatility dictate my behavior. I will let it guide my adjustments. That awareness becomes your edge, not your setup, not your indicators, but your ability to remain awake in the middle of the storm. You start to see that every spike in volatility is an opportunity to check your alignment. Every sudden move is a reminder to breathe, to reduce size, to return to center. Because the goal is not to eliminate risk. The goal is to stay conscious while risk unfolds. That consciousness changes everything. It changes the way you handle drawdowns. It changes the way you interpret randomness. It even changes the way you define success. Success stops being about money. It becomes about stability, about presence, about being able to watch volatility rise and fall without losing the rhythm of your own breath. When you learn to size with awareness, you begin to feel an intimacy with the market. Not emotional attachment, but understanding. You know that when volatility expands, you are meant to step back. When it contracts, you can lean in. It becomes a dialogue, a dance of respect. You stop overtrading because there is nothing to prove. You stop revenge trading because there is nothing to reclaim. You stop forcing setups because you finally realize that opportunity never needs force, only readiness. And readiness comes from peace, not pressure. So you cultivate peace the way others chase signals. You nurture it between trades, in your preparation, in your recovery, in your stillness. You realize that your real job as a trader is not to predict, but to preserve your capital, to preserve your focus, to preserve your inner balance so that when the right moment comes, you can act without distortion. Because the true mark of a professional is not how often they act, but how clearly they see when they do. And clarity only exists when the noise within you is quiet. Volatility-adjusted sizing is your tool for that quiet. It is your way of staying light in a heavy world. You no longer size to chase returns. You size to protect awareness. You size to ensure that every decision you make comes from stillness, not from survival. And the more you practice this, the more natural it becomes. You begin to feel volatility not as danger, but as rhythm. Not as threat, but as reminder. A reminder that all movement in price and thought in life is temporary, that everything expands and contracts, that peace is not the absence of change, but the ability to stay centered while change happens. And so slowly, the need to control fades. The need to be right fades. The fear of missing out fades. What remains is awareness. What remains is calm. What remains is the trader you were meant to become, one who moves with the market, not against it. Because in the end, trading is not about beating volatility. It's about understanding it, embracing it, and adjusting gracefully to its endless rhythm. That rhythm is not chaos, it's life. And when you learn to breathe with it, you discover the truth that every great trader eventually finds. The market is not testing your strategy, it's testing your state of mind. So you listen, you size with awareness, you align with volatility, you remain calm within the chaos. And in that calm, you find freedom. Not the freedom of certainty, but the freedom of acceptance, the freedom to trade without fear, to act without tension, to live without resistance. That is what volatility-adjusted sizing really means. Not math, not mechanics, but mastery of the self. And mastery in trading and in life always begins where control ends. And so we return to the only truth that matters. The market doesn't test your strategy. It tests your state of mind. Every spike in volatility, every sudden loss, every unexpected win is a mirror showing you how attached you are to certainty. When you size with awareness, you begin to live lighter. You breathe easier. You realize that peace was never found in the chart. It was found in your response to it. Volatility is not chaos, it's rhythm. And the trader who learns to move with that rhythm no longer fears the storm. They become the calm within it. That is what Mind Over Markets is about. Not trading harder, but trading wiser. Not mastering volatility, but mastering yourself. If these words found you in a moment of noise, let them remind you clarity is always one breath away. Thank you for listening. Until next time, trade lightly, breathe deeply, and remember, the edge is not in prediction, it's in presence.